Hello, everybody. Welcome to this webinar organized by Wellford and in collaboration with RHB. So, our webinar title today is US Tariffs and Malaysian Warrants Risk, Opportunities, and Strategies. So, my name is Shen Chu. I'm the moderator for this webinar. Now, ever since President Trump took office, he has signed many executive orders and he has announced several aggressive tariff policies that have shaped global trade dynamics, okay, particularly impacting Asia. So it brings on the renewed focus on the US trade policy and the ripple effects worldwide. So this kind of protectionist policies will certainly impact many key sectors and economies, as well as bringing heightened volatility to the market. So retail investors like us have to be well prepared to face this kind of opportunity or challenges that this shift could bring. So today we will discuss about the impact of the US tariff on the global trade and the Malaysian markets. And we also learn how to effectively leverage structural warrants to take advantage or capitalize from this increased volatility in the market. So today we are very honored to have two speakers who will share their view respectively about the landscape of how the tariff will impact the key economy sectors and also the Malaysian market. And our second speaker will talk about how do we use warrants to profit for this from this volatility. Before I begin, let me state our disclaimer. Whatever we share in this session is only for educational purpose. So in no way that I give any recommendation for you to buy or sell any listed securities that we mentioned here. If you decide to make any investment decision, you are solely responsible for all your investment risk. Now, our first speaker today is Mr. Max Tan. Okay, let me briefly introduce him. So he is a passionate investor with over 8 years of investment experience and currently serving as an associate director at Sensuria Capital, specializing in private investment in public equity deals and late stage IPOs. With extensive experience in risk and compliance management and a solid background in the Malaysian stock market, Max bridges funds with promising investment prospect. He is also the managing director of Goraku Capital Sdn Bhd, delivering valuable financial content and ensuring fair information distribution among investors. So his expertise is further recognized as an active speaker on City Plus FM and an SGX Academy speaker. Now, furthermore, Max is also a registered marketing representative with Momo Securities Malaysia Sdn Bhd, Weibo Securities Sdn Bhd, and iFast Capital Sdn Bhd. So, ladies and gentlemen, please help me to welcome Mr. Max Tan. So, Max, how are you today?
Hi Shane, good evening everyone. I'm doing fine. Hope you guys are doing well as well. Thank you so much for the kind introduction and thank you Life Champ, Wellford and also RHB for having me, RHB Warren for having me today.
All right. So, I can't wait to learn from you about your perspective on the impact of the US tariff. So, go ahead, Max.
Sure, let me share my slide. Okay, once again, thank you everyone for joining today and hopefully this will be a fun session for us. If you can see the slide, just a quick testing, can you please comment one if you can see the slide and also if you can hear me loud and clear? Or you can comment a hi. Okay, Lina, Brian, Lau, Patrick, Leo, Norian, Rasli, PK, hi. Stephen, hi. Okay, thank you so much, guys. I think the slides is clear and my voice over here should be fine. So I think nowadays as an investor, I think we are all very concerned on the current Malaysia market outlook and also the environment, right? Given that all these tariffs are in place and even one of the best performers globally in terms of the indexes, which is the US market, we have also seen a very significant retracement from the recent all-time high, which has again also impacted our Bursa Malaysia market, including FPM KLCI and also the small caps. Now, today we are going to talk a bit about the tariff part and some recent Trump section and the impact onto some of the Malaysia sectors respectively. Then later, Vanessa will discuss about on the warrants part on how you can leverage on warrant and whatever information that we have in place and how we can utilize them, right? So let me share Go to my next slide. Okay, just a very quick disclaimer. The information or whatever we share today by no means should be used for any investment purposes, and is solely for educational and informational purposes only. So if you really need someone to give you investment advice, I think you can consult a professional or any licensed person. Okay, with that, I think we can kickstart on the next slide. Right, so back onto tariff, just a very good overall glimpse on what is ongoing, what the tariff is about, right? This is a snapshot of the exportation US. We're talking about Mexico, talking about Canada, and also we're going to talk a bit about China side, right? So since the 20th of January 2025, which is the inauguration of Trump, so we have started to see very aggressive action towards his what he promised, making American great again, MAGA. And surely the tariff on what surprises a lot of people might be the tariff onto China directly, right? The keyword is directly. It's not as harsh as whatever he initially mentioned, 100%. Yes, 100% on certain items, the levy onto the healthcare products. We'll talk about that part later on. It's now a 10% across the board tariff, which is quite interesting. However, he actually imposed a harsher tariff onto two other regions, which is Mexico and also Canada. And also, it is a kind of across the board kind of tariff, which is 25% each. Now, if you want to dive deeper a bit into why the import, export, and also economic landscape of the US and why he actually does this, is that if you look at as at September 2024, right, the 15 countries actually contributed up to 15 countries contributed up to 75% of the total import of US as at September 2024. Mexico, as you can see over here, takes the lead with 632.3 billion, or a total of 16%. Canada, on the other hand, the neighboring country, takes up to 572.9 billion, or 14%. So both of these countries add up already around 30% of US import, right? China has 426.9 billion, or 11% in terms of total contribution. So on a first glance, it seems like, oh, Mexico has, in fact, is the largest trade partner or import partner for the US, but the economics behind the import numbers is actually much more complex. So I give you another number. China's FDI, foreign direct investment into Mexico, back in 2023 is 100.2 billion US dollar. So to put it into perspective, this is the highest in 13 years in the history that China has put in money into Mexico. Now, I think with these statistics in place, it would be quite fair to say that Mexico is another gateway for China to export their products over into US indirectly. And hence, we can see that the tariff over into Mexico, it would impact Mexico directly. Yes, a lot of players, you see a lot of manufacturing companies, actually, they shift direct or indirectly or JV into Mexico, which are a lot of China-based companies. So they're moving over. So this tariff not only impacting Mexico itself, but it's also somewhat hitting the China side of China companies. And there is also another argument where the tariff that are imposed now, it will ultimately impact who? Question mark is who is going to pay for the tariff? The argument here is that US consumers are likely to pay for the increase of prices for the products, right? If you look at the promises that Trump made, including one of the things is, if you come back to US and you start your manufacturing facilities, we are going to give you a tax cut, which is 15% tax rate. And also we're going to give you some capital allowance, which means that if you invest in certain machineries, we are going to give you additional allowance on your taxable income. But as you know, in terms of pricing competitiveness, especially in terms of the labor, I don't think that a 5% tax cut and also those capital allowance incentive is sufficient to attract all these players going back into the US. Not let alone the concentration of the manufacturing plant in US alone, right? Especially after the COVID. So they need to move to somewhere else. And one of the things that Trump has done is also, after he became the current president, is also to reinstate the construction for the Mexican War, which he also launches the most significant deportation of the illegal immigrant so far, which means higher labor costs for the country. Where if you look it backwards, and he mentioned that, oh, I want to move manufacturing line back to US. From the cost perspective, it doesn't really favors them that much, right? But all this information for investor perspective, I think we can work backwards for a bit to get gist of what is going to be happening next, right? For example, if we are able to have a guesswork, not actually, I wouldn't say 100% accurate, but we have a guesswork that say that the prices of goods in the US is likely to increase because of all these factors. You see tariff, raw material import, or whatever end products, especially on electronics and also toys and also clothing and whatsoever. So all these prices are going to increase, and the inflation in US is unlikely to able to hit the 2% inflation target that they have set, right? When they are not able to set a 2% inflation target, so we could potentially expect a slower interest rate cut from the Federal Reserve. Meanwhile, it will also mean another thing, which is the elevated US dollar against Ringgit Malaysia for the meantime. Now, from a broad-based perspective, when we look at the USD and also the Ringgit, this could benefit all the companies that are doing exportation in Malaysia. You look at furniture, you look at some clothing. We have a clothing company that supplies to Nike. Everyone knows who are they. And also we have the gloves, we have the electronics, EMS player, we have the semiconductor, and much more manufacturing companies, right? And just a very brief, since we talk about exportation, some of you might have vested interest, or you might be interested in the furniture industry. So based on my own channel check with some of the players, that if you compare with last year inventories level, which means the retailer in US, their stock keeping level is lower as compared to 2024, which means that they are able to buy more from the furniture industry, but it is still far away from a very significant recovery from the demand. Yes, elevated US dollar might help them, but in terms of total sales and also loading volume, is probably not going to be so fast. And other side of the coin, when there is a higher US dollar towards Ringgit Malaysia, it will also hurt some import-based companies, especially with those that are importing raw material that are based in US dollar, right? And one of the things that, sorry, I should move to the next slide for a better perspective. As said, if you look at this chart over here, I think you can see that there's a V-shaped bounce in terms of the US dollar to Ringgit Malaysia. I hope during the strongest point of Ringgit Malaysia time, you had changed some other currencies, whether yen, US dollar, or Thai baht, and you actually travel from the time. If not, now is okay. I mean, against yen is probably still quite strong, but in terms of US dollar, has rebound back to the previous quite normalized level, which is 4.4 level, right? And another thing that we as investors should note is that with the tariff in place, with Trump in place, and our country's own, due to political reason, if you look at the news recently, we have a news reported where, as at February 2025, the net foreign fund outflow from Malaysia stock market is 4.32 billion. And in perspective, last year, 2024, the net outflow is 4.28 billion, which means for the first 2 months, which haven't even end, the net outflow for foreign funds has already exceeded the last full year numbers. This might be mixed because of the weaker market sentiment, political issue, and also Malaysia. We talk about semiconductor, which is a lot of people concerned about the GPU import restriction. We'll talk about that later on. This is potentially one of the reason also on the funds outflow. But the reality is our FBM KLCI, it dips to around 1,570 plus, not exactly 70, but 70 plus level and hovering around there. Recently, if you look at Bursa Malaysia market, our small cap or new IPO, which used to be 2023 and 2024 darlings, also performance is lackluster to say the least. And overall, I think now is a weaker sentiment for Bursa Malaysia market to give you a perspective. But does that mean all hopes are lost for the Bursa Malaysia market? But I think a lot of big bucks are made during the market downturn, provided you are able to manage your risk and also your asset allocation properly, which I think if you have the time, we'll talk about that later on. If not, Vanessa will share with you how do you manage your risk when you're trading warrants, since that is the main topic for today. And next, I think we'll move into a sectoral discussion, which is a bit more exciting. And we're going to talk about how the sectors, different sectors that are impacted across Malaysia. Now, I'm going to discuss about 3 sectors mainly. Number 1 is the semiconductor, number 2 is utility, and lastly, I'll talk about the glove industry. If you have additional industries that you would like to discuss, feel free comment below. So me and Vanessa, we can both see the comments, and if you have the time, before I pass on to Vanessa, I will also discuss on the sector if I have the knowledge on that particular sector, right? So next on, it will be the semiconductor sector, right? In 2024, a lot of people are talking about the semiconductor recovery, whether it's going to be recovery in 2024 second half. And C region or Asian region has always been in the talks of potential China or Taiwan +1 strategy. What does that mean? China or Taiwan +1 strategy, it means that previously, all these companies, they have a manufacturing hub, whether in China because of low cost of labor or a more complete supply chain, or maybe lower utility costs. And in Taiwan, definitely for semiconductor, they have a very, very, very mature front end and back end value chain over there. But because of all these trade tension, tariff, and uncertainty in place, so a lot of MNCs, multinational companies, they are trying to move out from these 2 countries alone. So they are looking for somewhere else. But where? As I mentioned just now, back to US, yes, with some bigger companies, maybe they can absorb the cost, right? With additional incentive given by the government. But for smaller players, are they able to absorb the cost of moving back to US? Probably not. Then the next option is to look at a cheaper option, which is on Asian region, Malaysia, Thailand, Vietnam. So Malaysia, we are able to speak in, some of us are able to speak in Mandarin, we are able to speak in English and Bahasa. Indonesia, of course, they are able to speak in English, but probably not in Mandarin. So we do have a certain level of language advantage in that sense, right? And over the past 2 years, we have seen a lot of significant semiconductor value chain players, they're moving into Malaysia and also our neighbors as well. So a lot of significant investment has been done over the past year, specifically on the semiconductor and also data center, which we will also talk about that later on, right? But for those who are concerned, maybe in your portfolio, you have certain stocks that are in the technology sectors, right? Which if you do have, it's very likely that your stock has recently experienced a tumble. Not because of the stock itself, financial is not performing, but it's probably due to the US market and the Nasdaq tumble, and also the broad-based market downturn, right? We'll also discuss a bit about the impact of DeepSeek later on this. And if you have a stock that is in technology stock in your portfolio itself, you need to check whether your stock is supplying to China or China-based customers. Why? This is because now if your invested company, they are supplying to China and they are supplying advanced products, which means that they need to buy advanced parts, be it instrumental, be it maybe on the vision part, maybe on higher end products. It's not likely that they are able to get supply from Japan, Germany, and also European countries for all this supply, because they need to clear. Let's say if I'm a Malaysian company, I manufacture ATE, automated tested equipment for a China player, right? Then I would need a lot of parts, maybe the handling, or maybe the vision, maybe the software part. It depends. But when it comes to advanced parts, for Malaysia companies wanted to buy from Germany, Japan, and also European side, they need to clear what is the end usage of your client. Is it using on the military? Is it using on the consumer electronics? Or is it using on home appliances? Or is it using on advanced, high power computer, HPC, right? Which kind of sector are they using on? It's very strict now. So they might cause a potential supply chain disruption, which means that the companies, they are unable to deliver the order. They have an order book, they have a backlog. The problem is they cannot deliver because of all this restriction, which is the quote unquote soft ban in a way. And furthermore, during Biden's administration, there's also the limitation in terms of the GPU exportation that's segmented into tier 1, tier 2, and tier 3. Tier 1 being the friendly countries with US, which is Japan and Taiwan. And Malaysia, unfortunately, or fortunately, we are in tier 2, at least we are not tier 3, right? We would need to get a status which is called validated end user, VEU, or national validated end user, NVEU status, which is what I mentioned just now. What are you using all these products for and for who, right? The validated end user status. So if you're able to comply with this US security standard, then you may able to exceed the 50,000 chips export for the 2 years. You may able to exceed that capping, right? And I'm sure by mentioning GPU, we are all talking about the same company, which is NVIDIA's GPU specifically. So far, if you look at the market share for AI computing, NVIDIA has, I think, easily over 90% market share in terms of the AI GPU, right? And if we move back into Malaysia, we're talking about NVIDIA, maybe move it back into Malaysia, looking locally. One company is actually directly associated with NVIDIA, and I'm sure some of you here definitely know the name, which is Nationgate Holdings Berhad. In short, we call it Netgate later on. So Netgate, they are appointed as the only sole contract manufacturer, the single one in the whole Southeast Asia region for AI server that are powered by NVIDIA's GPU, right? So the end user applicant is on the data center. However, for who, it is up to the client side and also the AI server seller. And the stock actually dropped by, I think, over 30% from a high of 3 ringgit and 3 cent, which is on the 52 weeks high. Now it's around 2 ringgit. I think today spiked for a little bit, right? So this stock specifically has been badly beaten by the news. Number one is the GPU limitation, which a lot of analysts, if you look at the analyst report, a lot of them are saying Netgate it's probably not affected, right? And the second is the part where we need to talk about, which is the emergence of DeepSeek, specifically DeepSeek V3, which are on par with, if you're using, I'm sure you guys using OpenAI, Gemini, or maybe in short, we call it ChatGPT. It depends on which model that you use. I personally, I use ChatGPT 4.0 the most, or some of you might use O3 Mini High. It depends on whatever purpose that you're using. But the DeepSeek V3 model is actually on par, I think, with at least with 4.0. If you look at how much money Microsoft has invested into OpenAI, how much fund they raised, and suddenly a player from China, they jump on the stage and then they say, oh, our V3 model only costs 5.6 million to create this model, right? But this number has somewhat been debunked in the sense that the 5.6 million only indicates the cost of doing that model itself, right? Model is one of the, how do I put it? One of the tools that you use, but a back-end infrastructure, how many chips that they have behind the back, that doesn't put into the cost in that sense. But however, this has raised a lot of eyebrows in terms of people questioning, do you really need so much computing power? Do you really need so much GPU? Which has also impacted NVIDIA as well. And of course, Netgate as the supplier also got impacted, right? But from my understanding, right, I've done a bit of studying, although not a subject matter expert. DeepSeek V3, whatever they are using, is called a distillation method. Ultimately, they still need to refer to a teacher model, which there are people saying that they are referring to ChatGPT as the teacher model to in shorter terms, it means that ChatGPT is in charge of filtering a larger number of all this data. And what DeepSeek V3 to train the DeepSeek V3 model is that they ask specific questions towards the ChatGPT model, which save a lot of computing costs in that sense. One of the ways is distillation method. There's a lot of dispute on that, but basically this is what distillation method means, right? And back to the stock itself, Netgate, is it really justified in terms of the drop so significantly? Now, if you look at the drop from previous high, 33 or 30% drop, price recently, I think, has remained flat, except for today, which has spiked. I didn't see the closing price, but probably around 6 to 7%. I think NationGate is probably a bit quite interesting for investor to observe them because based on one of the interview of the management with the edge and also some of the analysts target price given, apparently the management and also analysts is still quite positive on this stock itself. But again, there's risk to come with any single investment. If there's any further slowdown in terms of AI investment, which is not very likely, but there is a risk, and there is a delay in order delivery, or there's a cancellation of order, or they lose out other client, it will impact the sentiment prospects for the company. And bear in mind that even at 1.99 cent, as at the time I'm looking at them, the company is still trading at 40.43 times of PE, which to me definitely is not very, very cheap. And another stock, larger cap technology stock that a lot of people are looking at is probably Inari Amraton, but we call it Inari. So the stock also sees a very significant downturn in tandem with the, if you look at the technology sector as a whole, is also quite weak. And the Q3 performance by the company is probably not so great. But there's two specific analysts or investment bank that are very positive on them, which is DA Securities and also Public Bank. They given the stock itself 3.40 and also 3.11 target price respectively. Now, M Investment Bank, they have a different perspective, which is on 2.05. So it's very important for us investors to study all this analyst report and we see what kind of information we want to extract from that. But overall, based on whatever that we see from the analyst report, the short-term order for Inari is relatively lower in terms of delivery due to the trade war 2.0, which is the tariff issue that we mentioned just now. But over the midterm, the management actually mentioned that the launching of lower price smartphones. Now, I'm not sure if they are implying towards the iPhone SE or is on iPhone 16e, which has just launched not long ago, I think in the last 2 weeks, right, at a lower price. And this would support their radio frequency, which is their core segment, the RF segment. And more importantly, I think it's very interesting to look at Inari is that they are quite constantly looking at newer technology and sector to work on. High power LED is quite interesting, but not so. Another one more interesting that the sector that I'm working on is the edge AI related packages. Package, it means that they sort of test and also they put an encapsulation on top of the chip to protect the chip and also connect the chip with the substrate. In other way is to the last step, which is the back-end semiconductor part, right? For package. And they're doing something called Edge AI. It's somewhat related to NVIDIA, right? But in layman terms, this is AI done on the end user level. For example, if you are using ChatGPT now, the computation is done on their server. But what if I need a more real-time kind of computation? It's probably going to use Edge AI, which is more real-time and is more applicable to IoT, Internet of Things, like your smart devices at home and whatnot. So AI done at whatever that's nearer to you on the end user. This is what they are working on. I would say that this is quite interesting. And they are also working on a potential very big merger and acquisition. There's no details about this M&A deal, but I think Inari as a whole is always been performing quite decently over the times. But once again, the PE valuation as at the time I'm looking, 2.19 ringgit. The PE valuation is already at 34.22 times, which for a value investor, I'm sure you know, when you're investing in a stock with a higher valuation, when it re-rates due to whatever reason, for example, the M&A deal didn't go through, there's a potential negative re-rating, or the orders are weaker, or their next quarter performance is not so good. So there are all these negative re-rating that could impact the stock itself. So this is the underlying risk for the company itself, right? And I think I want to move on to the next sector, which is utility. But let me just comment a bit about another technology stock that a lot of people are looking at, right? Which is SFP Tech Holdings Berhad, SFP Tech. This company, I think a lot of people have noticed they crashed, I think around more than 50% from their 52 weeks highest point. So what happens is that they have expected credit loss, ECL in short, of 24.1 million in the current quarter. What is this? Why is there a ECL of 24.1 million, and what does ECL means? So basically, they have a China client. Again, what I mentioned just now, there's a potential supply chain disruption in terms of delivery issue. There is a delay in terms of collection from SFP to their China client. And according to them, due to accounting standard, they need to put it at they need to cost it out first. It means that we expect that we couldn't collect it back from this China client. But apparently, according to all these latest analyst report, they are quite positive in terms of their collection and also recovery on the payment. We still wouldn't know until the next quarter. But nevertheless, the share price has already gone down so significantly from the peak. And I think, in my own opinion, the share price more or less they has reflected the ECL issue, which is the China client. There's a potential of where SFP Tech couldn't collect the money back from the China client, right? But SFP Tech, this stock has always been trading at a premium and also forward basis. It means that investor, whether retail or institutional, they're always very positive on the company's growth. If the company still couldn't deliver a satisfactory result in the coming quarter, that is the downside risk and also further re-rating for the company. There's already a cessation of coverage onto the company, which is one of the things that we as investors, we need to take note, right? But that are the three companies that I would like to mention, and also somewhat impacted by the tariff. And also you could apply what happened to these three companies also to whatever technology companies that you're looking into, right? And next, we're gonna go a bit faster, so we have more time for Vanessa later on. We're gonna talk about the utility sector, right? And we talk a lot about semiconductor, we talk about data center. Ultimately, you still need power to support all these data center, especially when the data center is tier 4, right? There's different tier 1, tier 2, tier 3, tier 4 data center, hyperscaler and whatnot. But they need a backup power source for all these data center to ensure there's close to zero downtime. Different tier, they have different downtime, 99.57, 99. I don't know what, but there is a guarantee no downtime, which means that they need 2 power source to supply to the data center itself in case one shut down. So there's a significant and very huge demand towards the whole utility sector as a whole. So as I mentioned over here, so far, Malaysia, we has maintained more than 25% power reserve margin, which means that anything happen, we still have power supply. And obviously, as data center expands, more power is needed. And if you have the time, if you're interested, we can talk a bit about the RE sector, renewable energy sector as well. And one of the stock in limelight, I think, is definitely YTL Power International Berhad. YTL Power. For the past 2 years, YTL Power, very obviously that they have one of the strongest performers so far. And recently, YTL Power UK, their UK subsidiary, Wessex Water, they has been delivering, except for their telecommunication arm, which has losses narrowing, but still is not really delivering, right? And a lot of people, they buy into YTL Power because of their data center segment, where the AIDC project, that's a lot of people has been anticipating, based on the analyst report, is on track for the first 20 megawatt computation power, not power plant, is computation power, 20 megawatt data center, expected to commence in July 2025. So you can calculate which quarter that this part will kick in into their earnings. As for their water utility segment, which is the listed subsidiary Brand Hill, I think they are still delivering quite good results, but analysts seems to be quite neutral in terms of the performance of Brand Hill so far, right? But ultimately, the concern over on YTO Power is still the same. What we mentioned just now is the restriction in terms of getting the Blackwell chips, which is the whether it's H100, H800, or the later ones, the more advanced chip for their data center. It Actually, now it depends on whether YTL Power is able to get the NVU, which is the National Validated End User status that we had mentioned just now, right? Based on fundamentally speaking, I think they are still very, very strong. Especially they have another segment on the power segment as well. And the data center project, I think they have signed off a 4-year contract with one of the off-taker to buy off the computing power for the first 20 megawatt, right? And 80 megawatt, when will it be completed? It depends on the supply in terms of the Blackwell chip. Probably not going to be so fast. And another utility play, which is definitely irreplaceable in Malaysia, is obviously Tenaga Malaysia Berhad, right? Or Tenaga Nasional Berhad. I think it's one of the very, very interesting companies that people, they used to look at them, but probably now maybe a bit boring. Why? Tenaga, there's already trading at 18.21 times, and dividend yield still very attractive for a large cap with growth potential, which they are having 3.39 dividend yield as at a share price of 13.56, 13 ringgit 56 cents specifically. So if you want to compare, right, we talk about semiconductor race, and if you want a more stable side, maybe stable side of things, you can look at a hybrid YTL Power, which have the utility side of things and also the data center. Or you want to play safer, which is the supplier of the energy and also the power, then potentially you can look on Tenaga. As I mentioned just now, we need more power ultimately. And if you are in Peninsular Malaysia, you need to use Tenaga's national grid. Except you're looking at Sabah and Sarawak, they have their own respective TNB, which is Sabah Energy and Sarawak Energy. They are also seeing the increased demand in terms of urbanization, so they need more power. But in Peninsular Malaysia, I think the demands is much more significant, right? Now, the prospects of Tenaga, the result of Tenaga is still quite positive. EPF, I think they're still buying aggressively on Tenaga itself, but I think it's also partially to support the foreign selling pressure onto Tenaga itself. So, yep, if you're looking into utility, which is the I would say evergreen industry, right? Despite the tariff pressure and also data center restriction and or whatnot. So now I think this sector is quite relatively stable and more interesting. Okay, and we're gonna look into the glove sector, right? Glove is a very interesting topic, and previously they have a very good run in 2024. I think they are the sorry, not 2024, but end 2024 and early of January 2025. They are the very obvious potential beneficiaries from Trade War 2.0. And just in time, there is usually every end of the year, there's a flu in US. Actually, not in US. You would notice that by the end of the year, October, November, and December, your friends around you, your relative, or your colleagues, it's easier for them to get sick. Suddenly get flu, they are coughing, maybe not fever. This would also increase the prospective demand. And all these news are talking about, oh, there's another viral virus in run, right? So a lot of fear. So it will also leads to a demand for glove, right? In that sense. But the most important part is that the medical and surgical glove from China to US, they are imposed a 50% and also 100% levy in 2025 and 2026 respectively. So what happened is that the glove sector, as you can see, they already moved up very significantly once, as Malaysia remains as the largest glove manufacturer in the world, medical glove and rubber glove. In that perspective, 45% market share. China is 28%. This is in 2024. But with the lower than expected results, as you can see over here, Hatalega, Kosan, and Top Glove exception. You can see over here because they have a lower quarter to compare with. This is on year-on-year basis. Otherwise, I think with the weaker result and also the IDSS intraday short selling pressure, all these factors in place and the general market weakness has resulted in a downturn for the glove sector. So would it rebound over in the shorter term? I would say that probably in the middle term is more probable in that sense, right? And before I pass it back to Vanessa and also Shane, maybe you talk a bit about the US side. Two stocks that I'm also looking at, right? I have no Western interest yet. Might or might not invest in the future. Is that a lot of people are talking about Tesla, and also before the webinar start, I actually had a conversation with Shane talking about Apple, right? We are both very loyal user of Apple. We talk about Apple later on. We talk about Tesla first. Now, Tesla share price has already moved up to 290.8 US dollar per share. And based on Yahoo Finance, the consensus price is around 345 per share. And if you look at their financial performance, they have two consecutive negative surprise, which means that their performance is below whatever analyst has expected, which is very important figure to look at in the US market. But the share price itself, current runway, is very much supported by the Trump and also Elon Musk, the sentiment, their relationship. I think a lot of traders, a lot of investors, probably they are not so, they don't care so much in terms of the total EV sales, their market share, and also there is a contradicting point between the Trump and Musk relationship, where obviously Trump is a pro oil and gas guy, and Elon Musk, he needs to roll out of renewables energy sector faster, so the EV could sell better, and also the carbon credit, it would perform better, carbon credit segment, right? So it's a bit contradicting, and I would say I'm quite cautious towards the current Tesla itself. But for Apple, since some of our friends has asked us as we talked about Apple before the webinar start with Shane, I think Apple valuation is more sensible as compared to Tesla now. Apple at the time I'm looking is probably changed now. Now it's around 913, not yet. Gray market probably moved pre-market. At the time I'm looking, Apple is trading at 240 US dollar per share and a PE TTM of 38.15 times, right? And we mentioned about iPhone 16e just now, which on the next day, which is tomorrow, they are going to officially open the availability tomorrow. Then we can see this new iPhone 16e with the A18 and also Apple C1 chip, whether it's well received by the market itself. And then it would reflect in terms of the share price performance. But in terms of consistency of earnings as compared to Tesla, I think Apple has a much more consistent and also more predictable in earnings by comparison, right? I've taken quite a bit of time on this. I think now I'll pass it to Vanessa to elaborate about the warrant part, and maybe some of the stocks we talk about, Nation Gate, maybe on the Hatalega, Top Glove, and Tenaga. Maybe Vanessa, I can share a bit on how investors can leverage and also how they can trade with a lower risk, but they have a potential higher return. So over back to you, Shane.
All right, thank you so much, Max, for sharing your perspective. If I may chip in, I think the focus on Tesla now, I think a lot of investors are thinking about, not just the EV, but also on Tesla Optimus, the humanoid, and also the Tesla robot taxi. Okay, and these two new ventures, people are waiting for the arrival. So I guess that pumped up the share price prior to this, but now the share price has corrected to a bit more logical valuation, okay, but still a bit expensive. All right. Okay, so thanks, Max, for sharing your perspective. So I would like to introduce our next speaker who will talk about how do we leverage on warrants to capitalize on opportunity in this heightened volatility period. So she is the warrant specialist at RHB Investment Bank, where she applies a comprehensive knowledge in equity derivative and wealth management. And she regularly conducts seminars and webinars on structured warrants to her clients nationwide. Prior to her current role, she had 6 years of experience in wealth management, which included expertise in structured products and adeptly handling a diverse range of client portfolios. She's a dual license holder of CMSL SRL license from Securities Commission Malaysia and holds a bachelor degree in economies from University of Malaya. She's none other than Miss Vanessa. Vanessa, how are you today?
Hi, Shane. I'm good today. Good evening, everyone.
Yeah, good to have you here. Okay, so you may share your screen now.
All right, thank you. Thank you, everyone. Thank you so much, Max, for sharing your research and I would say it's really, really. I mean, you are really sharing something that is, um, relevant to current situation, in current market. So, as you have just mentioned about the US stocks, Tesla and also Apple, and also Shane also mentioned about it. So I just share that we are currently have or I'm so sorry. So currently we are having three US stock warrants that's currently listed on Bursa Malaysia. So if you are an investor over Tesla, Apple, Airbnb shares directly, yes, I mean it's great. But if you would like to have a leverage exposure, so how do we say that? It's actually through call warrants. All right, so that's what we're going to discuss today. You can actually use relatively smaller capital to gain an equal exposure on certain stocks. So in this case, we do have Tesla and Apple. Although they are US shares, right? But we do have them on Bursa Malaysia. All right, so I'll talk about this later on. I mean, this is just an introduction because it's not my slide. All right, so I'll be sharing my slides. All right, so today, I think I will not be taking too long in sharing my contents because I guess what's exciting is the Q&A session. All right, so today we'll be talking three main things. First, how do you choose the right warrant based on current situation? Secondly, is how do we identify the investing opportunities under the Malaysian and also the US stocks? And third, as we all know that structured warrants is considered a high risk product and also sophisticated product. How do we actually manage risk effectively while trading them? Okay, all right. So let's go through this quickly. So that's actually two types of warrants that's listed on Bursa Malaysia. And usually when we say warrants, we don't mention whether it's a structured warrant or it's a company warrant. All right, so they are actually different. So the first main, I would say the biggest, I would say the main thing that differentiate both of them is that they are issued by different type of entities. So structured warrants like call warrants, they are issued by the financial institution. While for company warrants, they are actually issued directly by the company. All right. So recently we have we have seen so many announcements on the bonus issue on warrants. So they are actually the company warrants that are listed by the company themselves. All right. So in this case, when the financial institutions like us, RHB Investment Bank, we issue the warrant and we will be the market maker for that warrant as well. While for company warrants, there's no market maker, and that is based on the supply and demand of the warrants, and that determines its price. All right, the maturity period for structured warrant is very, very short at this current market juncture. It's actually from 6 months to 5 years, but I would say currently we are actually issuing 6 months to 9 or 12 months of warrants. I mean, it depends on the issuers how long they want to actually set it and how long it's the expiry date. All right. But for company warrants, it's actually longer. It can go up to 10 years. While for the settlement method, one is by cash, like structured warrants, generally in cash. And also for company warrants, they are generally in shares. So how do you identify them on Bursa Malaysia? It's by the stock code. So when you see something, I mean, the company name dash C or CW is actually a call warrant. H or PW is actually a put warrant. For CW and PW, you will see it mostly in the Hang Seng Index warrant or maybe the FCPO warrants. You will see CW or PW. But in general, for stock warrants, they are actually named by C for call warrants and H by put warrants. While for company warrants, it's very easy to identify when you see W. that's company warrants, because W stands for warrants. Okay, so these are actually the example for the company warrants that's issued by the respective companies like YTL Corporation, Supermax, and these are actually the company warrants. I have some actually sometimes do receive some calls in the office asking about all these YTL Corp warrants and all, but they are not the core warrants. Actually, they are actually the company warrants. All right, so they do have their own settlement method and also the exercise price that's actually set by the company. All right, so how powerful is call warrant or put warrants? All right, so as we know that warrants are commonly identified as something that's high risk with also high return. So for this example, Tesla C6 is actually a call warrant over Tesla share. So Tesla shares that's listed on NASDAQ, but we have Tesla C6 that's listed on Bursa Malaysia. While you can see from December last year up to the Valentine's Day. So this is what I actually extracted from the Bloomberg screen. Tesla share actually went up by 34%. All right. However, Tesla warrant, which is Tesla C6, as from the day we issued up to after we have issued it from 1st of December up to the Valentine's Day, it has gone up for 72%. All right, so this is how we identify it as a leverage exposure, and it's usually explained by the term effective gearing. So it's like a gearing. As we know, gearing is something it's magnifying something, especially your return. So it's at about 2.3 times at this moment. But if you look at the historical performance, it's actually about the same. It's doubled up. Okay. However, it's not a guaranteed performance that the share is moving upward. So whenever it's going down, the warrant will actually go down as well by 2 times. All right, so that's how we call it as a risk when you invest in the sophisticated products like this structured warrant. And also you might actually find some similarities that it's very similar to an option. All right, so you have some gearing, you have exercise, you have a strike price and all. Yeah, it's very similar to options. However, for structured warrants, we have structured it to be cheaper compared to options that is listed on the derivative side. So it will be easier for investors like us, the retail investors who's investing in the equities, but at the same time would like to get some, some leverage over the stocks. Okay, so this is actually a screenshot, a snapshot from our warrant website, RHB warrant website, that 99 Smart CM. So as we all know that 99 Smart is actually a very popular stock last year. Yeah, so from 28 November, so this is how I capture, a very short term of gain from 28 November to 6 December, in 2 weeks time. The mother share actually gained from 2 ringgit 33 cents to 2 ringgit 61 cents, while the warrant 99 Smart CM actually gains 46% from 16 cents to 23 and 5 cents. Yeah, so this is actually what we call an effective gearing. So it's actually averaged at 5 times. So if you do a very simple calculation, you will see the effect of the effective gearing. All right, so how do we choose it? Inari. So this is an example on Inari stock warrant. So Inari C3C is actually a call warrant over Inari. So we can actually see that there's so many parameters about this call warrant, like exercise price, ratio, expiry, time to maturity. These are actually the fixed parameters. That is fixed upon the issuance of the call warrant or the put warrants. That's why it's called structured warrant, because we have set all these terms. All right. So on the other hand, the effective gearing, delta, sensitivity, all these, they are actually is a variable. So it will change according to the mother share price. It will change according to the time to maturity, the implied volatility, and so forth. So these are all the parameters that you have to know and we call it the warrants lingo. That will be, for you to choose a warrant, you have to understand what are those, besides from just knowing it's a Inari and it's a call warrant over Inari. All right, so which one would you choose? This is an example for YTL Power 68 and also C81. All right, so would you actually choose something that is cheaper, like C68 with just 2 cents of the, for the absolute warrant price, or 70.5 cents, and that you consider is really expensive? All right, so in this case, I would share with you, for sure, in one glance, I will know that I'm not going to invest in C68. First, it's very close to the expiry on the 27th March. Secondly, will be the very, well, I mean, even though the effective gearing is really high at 18.9 times, but the sensitivity is at 16.9 ticks. So I'm going to share with you what is sensitivity. While for C81, even though it's like 70.5 cents for this warrant, right? The expiry date is longer, you have a very moderate effective gearing, and also very, very little ticks of sensitivity, right? So which means it's more responsive to the shares movement. Okay, so yeah, this is the two things that it's really important for you to know. How do you choose? So tactically, not only choosing it because of the mother share is like in a bullish movement, while you have to choose it and understand what are effective gearing and sensitivity. Effective gearing, it's a very simple calculation, like a multiplier. So when you see 4.5 times, you know that if the share went up for 1%, then you're going to earn 4.5% from the warrant. But this is an example. While it goes down, then you know that you have to do the math. 2% down, and you might actually lose about 9% or more in the warrant. But for sensitivity, it's very different. When you see times, it's multiplier, right? Sensitivity is by ticks. So ticks is how, like when we invest in the share, in mother shares, like for example, when we move, when the mother share move 1 tick, it could be 1 cent or maybe 2 cents. It depends on the share price. While for warrants, generally warrants are priced below 1 ringgit. So for warrants, 1 tick is about half a cent. All right. So for sensitivity, when you see 2 ticks, which means your mother share have to move first. So your mother share have to move 2 ticks, then only the warrant will move by 1 tick, which is half a cent. And that also translates into the effective gearing from, after you do the calculation, you will see the change in the percentage of the mother share. But how do we actually look for the perfect warrant for yourself? I wouldn't say perfect, but it suits your strategy, right? So Inari, as Max has actually mentioned about Inari as one of a stock that you can monitor. So there's so many Inari call warrants on Bursa Malaysia. Like I actually sorted it out from A to Z, whichever is available here. But which one to choose? Instead of choosing your favorite, like you sort according to effective gearing, you sort it according to the expiry date. That's actually things for you to know is, first, you can eliminate those that is unfit. Like if you are choosing a boyfriend, you just eliminate them. Some of them, they're not qualified, right? All right, so first, you have to eliminate those that is very close to expiry. So delete them. 28 March, like, the Inari down there at the bottom of the list, they are very close to expiry. So you have very little time to trade. That's one thing. All right, so you don't choose them. Secondly, there is the exercise price that is so far from the share price. So I would say, because that time while I was doing this, the share price was around like 2.60 ringgit. All right, so I choose something that is very close to 2.60 ringgit. So that would be I highlighted them, the C3A and C3C. So expiry date, okay lah. I mean, still got 2 months more for 30th April. And also for C3C, we have a slightly longer time, 28 July. And also eliminate those with very bad sensitivity. When you see the ticks, there's so many ticks, right? Means that it has to move. The mother share has to move a lot for warrant to move by 1 tick. So you don't look at them because it's very slow. You won't actually get a very responsive warrant or also the performance if you're choosing them. And last but not least is extremely high effective gearing. So we know that that's the reason why we invest in warrants, right? We want the leverage effect. We want the multiplier. But when it's really high, it's going to give you a very high risk in investing them as well. So you can actually eliminate them, look for something that is quite moderate, and also set, okay, it will, I mean, going into the risk management, you have to set stop loss as well. All right, so this is a price matrix. That is a very powerful tool that you can actually refer when you invest in Inari. Example, Inari share and Inari warrant. So this tool is like a map for you. You know where to go. So whenever the share price, for example, the share price is currently 2 ringgit and 58 cents for Inari, the mother share. So you want to invest in Inari warrant. Oh, I think Inari C3C is a very good deal. I mean, it's a very good warrant because it's issued by RHB as well. All right, the bid price is actually 4.5 cents. So this is how you look at it. And if you are targeting Inari to go up by a certain percent, and you have set a TP, a target price of 2 ringgit and 64 cents, and then you can actually refer to this live price matrix to see if Inari share is priced at 2 ringgit 64 cents, how much Inari C3C will be at. So it was 5.5 cents. So this is an indicative I mean, it's not true. So, but you can use it in this way. But however, for price matrix, it changes from time to time. Every half an hour will, refresh it according to the share price as well. So it will be more useful if you use it intraday. So every day you have to go to our Warrant website to look at the price matrix as well. Yeah. So when there's different colors, then you know it's the thing is flipping. So we call it the flipping point as well. Yeah, so from 4.5 cents flips to 5 cents and then 5.5 cents. This is how we look at the live price matrix. All right, so going to something that is more exciting, right? So we have Malaysia and US warrants. So US warrants I already introduced to you. We have Airbnb, Apple and Tesla. Apple C18, Tesla C6. So for your information, RHB is actually we are the only US stock warrant issuer. So we issue stock warrants. So you can just buy one stock, like for example, Tesla, Apple, that is available. And also the live price matrix is available on our website. So you can actually use it to trade. However, we all know that we have a different time zone from the United States. So how do we actually provide the bid and ask price? All right, so we actually use the after hours price to price the price matrix, and then you can actually use it to trade. However, it's not going to move a lot intraday. So I would say that if you have a view or you would like to hold for a few days or maybe a few weeks is actually long enough, then you can actually consider Tesla and also Apple and also Airbnb stock warrants. All right. The second reason why you can actually look into the stock warrants is that the price for the warrants. So if you notice, the warrant bid and ask price is very cheap. It's actually less than 10 cents. So anyone can trade. All right. However, bear in mind, this will be these are actually listed and traded in Ringgit Malaysia. So you're not buying in US dollar. So you don't have to convert to US dollar to buy them. And you do not have to fork out. I would say, like, for example, Tesla is like near to $300, right? You don't have to fork out $300 to buy one Tesla share. Instead, you can actually buy it on Bursa Malaysia with this effective gearing and this sensitivity. So sensitivity, as I mentioned, sensitivity, when the ticks is lesser, it's better because it's more responsive, right? Then you'll be shocked. Oh, this one 246 ticks. How do I wait? Like, what do I have to wait it to go up for $24 by $24 and all? No, because for Nasdaq shares, right, their ticks is actually by 10 cents. So it's about $2. Yeah, so for every tick, every bit, every flipping point, it only requires about $2.46 in this case. However, I actually extracted this data after the market hours. So if you want it to be more accurate and more, more relevant, you have to use it during the market hours. Okay, not US market hours, but Bursa market hours because our traders only working that time. Okay, all right. So this is the US stock warrants. Tesla, this is like a snapshot from my website. I'll show you how to actually maneuver on our website. This is a snapshot, I think early this week. Yeah, early this week. So this is what you will see, the effective gearing, the sensitivity, and on your right hand side is actually the metrics for Tesla C6. So not forgetting our Malaysian stock warrants, because we are all, I believe that most of us are actually trading on Bursa Malaysia as well. So from Max sharing over his views on the US tariffs and how do we actually understand it, Malaysian stocks are actually highly, correlated to US tariff and also the policies. Everywhere, every countries around the world will be affected, that's for sure. But for Malaysia underlying, first, as Max also mentioned about semiconductor play. So, and also Netgate CK is actually a call warrant over Netgate, is one of our top traded warrants today. All right, so it's doing quite well. Actually, the closing price is at 1 ringgit and 99 cents, but it's recorded at 1.97 because it's after hours, right? So the closing price is still 9.5 cents for the warrant bid price. So it actually gained 26.7% from yesterday's closing. So it's doing really well because the mother share also went up, and it's giving you an effective gearing of near to 3 times. So it's about like 6 times 3 lah, actually by right. But because effective gearing, do bear in mind it changed from time to time. So it's about that, it's approximate. So it's not an absolute number, but it's an approximate number. Okay, this is the Netgate price matrix. So this is Netgate CK. I have mentioned that the effective gearing is about 3 times, sensitivity is 3.7 ticks. All right, so even though today actually it went up for 26%, but if you compare the 1 week past performance from 21st February to 27th February, Netgate shares actually went down. All right, so it went down by 5%, while Netgate CK from its issuance, it actually went down for 13%. Right, so it's still oh, I'm so sorry. I think my connection has some problem. Are we still good?
Yes, now we can hear you.
Just now cannot.
Yeah, we start at this slide.
Oh, this slide, okay.
You were
Then
talking about the relationship between the effective gearing, when Netgate fell 5%, CK and Netgate CK fell 13%.
all right,
Okay,
cool.
go ahead.
All right, so I carry on. Maybe they were shocked because Netgate dropped so much. Okay, so Netgate CK actually dropped by 13%. If you would like to capture on weakness, or you think that you are still bullish on Netgate, you can actually consider Netgate CK. First, I would say the bid price is currently is at about 10 cents, 9.5 cents. Today's closing. All right, so if you would like to invest in it, then you can actually use the price metrics. So for example, how do we look at price metrics? You can refer during the daytime, the trading time is 1 ringgit 99 cents. So that time the bid price is 9.5 cents. All right, so if you have target price of 2 ringgit and 6 cents or 2 ringgit and 4 cents, 204, you can actually set take profit at 10 cents. So you can actually make a difference, make a gain from there. But usually you will buy at ask. So in this case, 199, you buy at 10 cents, you want to make money, right? Then you have to exit at 207. So this is how we use the price matrix to trade warrants. And next will be YTL Power C81. I'll be sharing some of our newly listed counters. YTL Power C81 with an exercise price that is, I would say, closest to, it's not closest, but it's actually lower than current share price. So there will be a bit of intrinsic value. And it's providing an effective gearing of 2.9 times as well. All right, so the share, this effective gearing is not that high. It's about 3 times, 2 to 3 times. So you would see YTR Power C81 is actually not performing that bad compared to the shares. I mean, even though it's actually more than the share, but it's still not that bad because the gearing is quite moderate. Yeah, so for Tenaga C2Y, so Tenaga C2Y is actually a utility stock. All right, so this Tenaga C2Y, I would say the effective gearing is really relatively higher. It's at 6.8 times. All right, so sorry for this slide. I mean, so Tenaga shares from the 21st February to 27th February, it dropped by 3%, while C2Y actually dropped by 16%. So this is how effective gearing works and do to your investment. When it dropped, it actually dropped quite a lot, especially if you are investing in something that is with has 7 times of gearing. You have to expect when you make money, you really make a lot of money. But when you lose money, then you can actually see the aftermath investing in it. But it does hopefully it does not hinder your interest investing in Tenaga C2Y as well. Because if you are still bullish and you think it's a good time to buy it when it's slightly cheaper, you can actually diversify a bit into Tenaga C2Y as compared to the mother share price at about 13 ringgit. You can actually get it by for 10 cents only. Yeah, so it would be easy for you. All right. The next C39 is actually one of our traders pick as well. The next Dagang exchange, right? So the next C39 is giving us an effective gearing, or we call it the leverage effect, of 3 times, while a sensitivity of 3.2 ticks. So it's actually one of the very responsive DNEX warrant that is currently on Bursa Malaysia, where you only need 3 ticks movement in DNEX to move DNEX C39 by 1 tick. So if you compare like half cent, right, 0.005 ringgit is actually giving a very big percentage gain from 3.5 cents to 4 cents compared to 30 cents to 40 cents. So in this case, it translates to a higher effective gearing as well for the existing investors, for the warrant investors as well. All right, so even though DNEX is only priced at 33 cents, 34 cents currently at this moment for the share price, but DNEX is actually relatively lower. So it will be quite powerful when the share price move up by 3 ticks only, then you actually see the movement in DNEX C39 already from warrant bid to bid. All right, so last but not least, HATA C2Q, because I think it's actually a very popular gloves counter that is actually issued by RHB Warrant recently. All right, so HATA C2Q, we have witnessed the fall last week. It was quite bad. All right, but recently, I would say recently it actually moved up for a bit. However, it's not that much as well, because for the past 1 week, actually it dropped for 23% for HATA C2Q. All right, so it's actually giving you an effective gearing of 4 times and sensitivity of 5 ticks. All right, so use the right tools to make decisions, because it's going to help you to not investing into the wrong warrants and also expiring warrants, or maybe some warrants that is really not responsive, because that's going to help you to earn less or maybe lose more as well. Okay, so let's go to the boring part. All right, so warrants trading, definitely you need very good risk management. So you are not going to just buy and sell, or you buy and hold, because you have to understand that it's actually time decay in call warrants or warrants. All right, so these are the 4 things that I think it's really important, as I've received a lot of feedbacks from our investors and our colleagues as well. First, set a stop loss. This will actually require your technical knowledge. You have to, or maybe fundamental, it's fine, but you have to identify what's the support price and what's the resistance price. All right, so in this case, Inari, as I did this last week, right? So that's actually a support price at 2.58 ringgit at that time. So once you know how to use the live price matrix, there's Inari share and Inari warrant, this part, right? So you know that the support is at 2 ringgit and 58 cents. So once it dropped, it broke the support, 2 ringgit and 58 cents, you know that you have to sell it. If you are buying the share, you have to sell the share. But in this case, you're buying the warrant, right? So you have to set it at 4.5 cents. So this is how you set a stop loss using the price matrix. All right, so from 2 ringgit 63 cents, it dropped, then you have to set a stop loss. If not, then it will maybe drop further. That it's going to, don't go. I mean, you might have to hold it for a very long time until it expires, or maybe you have to wait for it to rebound to sell it back to the market maker, or maybe to the market. All right, so same works for this risk management. So you have to set a stop loss. But if you're making money, then you have to take profit, right? Then you have to set something that's on top to take profit. Yeah, so it works the same. So you know where to go. But for price matrix, as I mentioned, it's I would say it's fluid. It changes from time to time. So you have to do it very often to set the take profit and stop loss, like how you trade actively on the shares. All right, so secondly will be the time decay. This is really important for all the warrant investors out there. No matter whose warrants you are like investing in, RHB, Maybank, Macquarie, Kenanga, whoever. This is an example on my EG core warrants. So I have sorted it out according to the time to maturity. And also, I also show you how much is a theta. So theta is actually the time value that depreciates daily. If you're buying something, if you're investing in my EGC7C, so left 2 more days to maturity. Okay lah, I would say that you won't buy it, but you are holding it. You can actually notice that the warrant bid price drop very fast when it's about to expire, because the theta is going to depreciate by this amount, minus 0.003 ringgit. All right, so it's about 3 cents every day. So you will actually notice a drop in your warrant bid price, even though the share price doesn't move. But on the other hand, my EGC7Z is actually, it's longer dated. It has 184 days from to maturity. So you can notice that the theta is smaller. So even you hold on to that for 1 or 2 weeks, you won't actually notice the drop in the warrant bid price that fast. All right, so it's a time decay. And also, third, the warrants liquidity. Okay, so the warrants liquidity, it's actually noticed by the spread that's provided by the market maker. So that's bid and ask price. So when you see bid and ask price, usually it's by 1 bid, right? So it's very good for you. If you buy at ask, then you sell at, even though you sell back to us at bid, then you don't actually lose that much. But for those warrants that are low on inventory, or we call it the sold out warrants, normally market makers, we have to widen the bid and ask price, which means we discourage our investors to buy this warrant. Yeah, because in this case, when it's low on inventory, means that there's so many warrants that is not on the market maker's hand that we cannot market make anymore. We cannot provide a very we cannot provide enough liquidity, and also very tight bid and ask price. So in this case, we'll widen them, we'll widen the spread, and you have to look for some other warrants. Okay, so there's so many warrants in the market for you to choose lah. Yeah, you don't have to buy something that it's with very wide bid and ask spread. You're going to lose out from there. Okay, so yeah, this is actually my EGC7W from RHB, so you can explore somewhere for my EG warrants. All right, last but not least, the diversification in shares and also counters. So as we know that warrants, they actually mirror the performance of mother share. So when Gamuda drop, the Gamuda core warrants, they will drop as well. So with a very limited amount or a fixed amount of investment capital, you don't actually put everything in one basket. It's not that you buy Gamuda, C2L, C2M, C2N, then you actually diversify your risk. That's not true. You can actually invest in Gamuda, UEM Sunrise, or Top Glove, which with a very limited investment capital, you can actually have a diversified risk and also diversified return as well. Okay, all right. So manage your risk investing in warrants with the right tools, which is the RHB warrant website, that you can actually search on Google RHB warrant website, and then it'll bring you there, and you can actually use it to trade with us, especially RHB warrants. And also you can use it to filter out all the warrants on Bursa Malaysia as well. So you can compare apple to apple, orange to orange to make an informed decision. All right. So if there are any questions, feel free to call us or drop us. Just call me. I'm fine to pick up calls. All right. So I'll pass it back over to Shane so we can actually attend to the questions that's raised. Thank you.
All right. Thanks, Vanessa, for teaching us how do we use warrants to leverage on this volatility in the market. So if any questions are asked any of our speakers today, whether Max or Vanessa, please write your questions in the Q&A box, okay? Not the chat box. We have 10 minutes for Q&A. So the first question I see on my screen is from Richie. So I'm a beginner. So under the current volatility in the stock market, is it advisable for me to trade structural warrants since highly leveraged products? Vanessa, over to you.
Hi, Richie. Yes, thanks for your question. So I would say it's okay for you to trade structured warrants when you understand them. If you understand them, you can trade them. And also do manage your risk, like you don't put everything into structured warrant because you are learning, right? So you can actually put I would say maybe 10 or 20% of your capital that you can actually learn from there. All right. So first thing, you have to understand how warrant works. So I think today I've shared some. Secondly, you can invest into something that you're interested in, like for example, Inari, Netgate, or whichever counters that you're interested in with call warrants, or maybe put warrants, so that you can learn from it. Yeah. So you can still invest in it after you have understood it, and also manage the risk, as I mentioned, set the stop loss, take profit and all. And then I think you will be good to go. But do remember to seek advice from your banker as well, if you have any. Yeah.
Okay, I attend more educational events with RHB, okay, to learn about warrants. All right. The next question here is from Lily. Could you please explain delta, theta, implied volatility, and also premium?
Okay, sure. So I think you are she's
Would you want to
actually
turn on your video camera?
Yeah, everyone. Okay, sorry, you want to see me, right? Okay, let me share with you on our warrant screen. Okay. I think you are on are you on RHB warrant website now? Hi. Are you guys seeing the website?
Yes, we are seeing it.
Okay, so since I have been talking about Netgate, and Netgate has been doing quite well today, so I think I'll just explain on Netgate. So let's go to Netgate CK, so you can actually look at the details. So she wants to what does Lee wants to know? Sorry, can I get the question?
Delta, theta, implied volatility, and premium.
All right, so you can actually click on this blue color thing, right? So you can actually go into it. So delta is actually the change of warrant price in accordance to the change of share price. All right, so for delta, theta, these are actually the Greeks for structured warrants or options as well, because we actually price structured warrants using the option pricing model. All right, so delta is the change of the warrant price in accordance to the change in the share price. Theta is actually I just shared, but you didn't notice. So it's actually a time decay. So you can see negative 0.02 cents, right? So this is actually the value that depreciates daily, and it will increase when it's approaching to the expiry date. So for implied volatility is actually the volatility that the traders is taking its view on these Netgate stocks. All right, so it also changes from time to time. It's based on what are the traders' view historically or maybe in the future. And last but not least is the premium. Premium is actually, okay, in the textbook answer is that how much for the mother share to move up in order to break even your cost in investing into this product. All right. So, but in basically, how do we actually choose warrants, right? We will look at mainly that is translated into sensitivity and effective gearing, because all these Greeks, right, they are those factors that is going to influence the price of warrants, the gearing, and also the sensitivity. Yeah. So I hope I answered your question because it's quite general.
Yep. Alex has a follow-up question, which is, why is the premium expressed in percentage format?
Yeah, because it's the percentage for the warrant to the share price to move up, the percentage. It's not in absolute price, so it's in percentage. So usually you say I gain 1% in the share, I gain 2% in the share, so it'll be easier for everyone to refer as well.
So in
So
this
premium
case,
is not like the insurance premium. Insurance premium is by by absolute price. Yeah.
so in this case, like the mother share has a move 15.5% before the warrant can break even, lah, correct?
Yeah. And at expiry. So if you hold
Or
on to
break
this
even
thing,
at expiry.
yeah, at expiry. So you sometimes you will see the premium is like so low, right? It's like 1%, 2%, right? They are usually either they are very they are having a very high intrinsic value, they are super in the money, or they are very close to expiry. So that's why you can see very, very low premium. So it does not mean that when the premium is super low, you will definitely make money. Yeah, so it's really important for you to understand how premium works. It's actually good for you to refer, but don't hinder yourself from investing into premium with 20 or 30%, because what's going to translate into your absolute profit, right, is actually the movement in the warrant price. And you are not going to expect to hold one warrant from day 1 to day 100, because you are going to trade in and out, in and out. So it's really important for you to understand the rest than just buying something that is super low in premium.
Mm.
Mm.
Am I right to interpret delta in such way that for every 1 ringgit change in the mother share, the warrant price will change by 67.7 cents?
You have to let me think about it and I'll answer you.
All right.
Because
Okay.
for effective gearing, that's actually how we get effective gearing, is actually delta times gearing. So we have effective gearing. So in this case, if you want me to do math at this hour, I'll have to think about it first.
Okay, understand.
Yeah.
Not a good time to ask you at this hour. Okay, so, uh, so Lily have a follow-up question, which is in this case, right? When the delta and implied volatility is almost close to each other, does it mean that it is very high risk?
You're asking me very technical question that I have to go and study about it. When delta and implied vol is very close to each other, I have to check on it. And if you don't mind, you can actually drop me an email or maybe call me tomorrow. So after I got the answer and I figured it out for you, so I can share it with you as well.
Yeah,
Thanks.
actually, implied volatility and delta are not exactly directly correlated, lah. Okay,
Yeah, because they are
yeah,
different. I
they are
mean,
different Greeks. Okay,
Greeks for
implied
actually
vol
implied vol is Vega. So, but I still have to go and figure it out for her.
Yeah, so I think the question is not directly related. Um, so delta also depend on the moneyness, right? The more in the money it is, the higher the delta. Okay, implied vol it depends on the market
Traders' views, market
volatility.
views.
Yeah.
True.
Do we see that there will be an expected heightened volatility in the next 1 year or in the next period, right? Then the implied vol logically will be higher lah. Okay, if it's closer to earnings period, then implied volatility will go up. Right. So there are two different things.
Thanks, Shane, for helping me.
Yeah.
Thanks.
To share some color of what I understand about Warren. Okay.
Right.
Okay. So the next question by Noreen Wong is there any regulation that issuer need to follow when you want to update your price matrix? And has anyone checked on them? So I'm also interested to know. Anybody check on you?
We check on ourselves. All right. So usually for price metrics, right, it's we actually use uh we actually hedging. I mean, we use a auto hedger. So it's actually basically it's everything it's formulated as well. So I would say that for market makers to be present in the market from time to time. We have to be there about 90% of the time to provide a very effective bid and ask price. So definitely sometimes, right, there will be some random error as well. So we do appreciate that our investors to contact us in case that you have noticed any discrepancies, right? So regulations that's regulating on how we actually price our warrants, I would say definitely yes, because we have Bursa Malaysia and also Securities Commission that is regulating and monitoring us from time to time. So I would say yes, but don't ask me which regulation is that. Thank you.
All right. So the next question by David is that is it advisable for us to buy long expiry date warrant compared to the short expiry date warrant so to avoid being expired into worthlessness if it's our money?
All right. So I would say it's advisable for you to buy longer dated warrants, but also you have to consider other factors like the exercise price. You have to consider on the sensitivity, the effective gearing, and the rest. It's not that the longest dated will be the best because it's going to give you more time value only in the warrants. But that small time value doesn't mean that it will depreciate very slow compared to some, some warrants that are actually priced with higher implied volatility and higher other thing. It's more expensive, but it's longer dated. But in case from apple to apple, everything else being constant, right? Definitely you can choose something with longer dated. Yeah. Whether it's not expiry in the money or out the money, right? It depends on your exercise price instead. Yeah.
All right. Let me see if there's next question. It's 10 o'clock, so we overrun for a little bit. Will the premium on the warrant keep on changing every day?
Pardon? Sorry. Can you please
Will the
repeat?
premium of the warrant keep changing every day?
Yeah, it changes from time to time because it depends on most importantly, the mother share price.
All right.
Yeah.
So is the lower sensitivity better for traders?
For
There's a
warrant
question by
traders,
Leo. Yep.
yeah, in general, right, sensitivity lower, you mean low tick, lesser ticks, right? Like 1 ticks, 2 ticks, 3 ticks. I would say if you are monitoring the warrant and the share price very closely, and you are doing I would say intraday trading in and out, first in, first out, right? Then you can actually go for something that's more sensitive. However, do bear in mind that when you have a lower ticks of sensitivity, which means it's super responsive, when the share price drop, then your warrant will drop very fast as well. Yeah, so it still depends on your risk appetite, whether you want something that is really fast, very responsive or not. But if you are a high risk taker and you are monitoring it closely, you can go for something with lesser ticks of sensitivity, which means more responsive warrants.
All right. So Jack would like to now ask, is it correct to say that ticks and gearing change every day based on market condition and market price?
Yes, that's true. So it changes from time to time. Actually, when you're if you know you can actually use the price metrics to you can definitely use our Warrant website to see what's up to date and also the price metrics. And yes, it changed not daily but from time to time because the share price changed, right? From every seconds, every minutes. Yeah.
All right. So should we consider volume too? Since the closer it is to the maturity, the higher the volume. So there's a question by Chun Kiet.
Okay, so in this case, right, the volume is actually the traded volume of this warrant. I would say it actually indicates demand of the warrant as well. Does not mean that it's a perfect warrant for you because everyone has different risk appetite and different trading strategy. But when you see when it's closer to expiry date, the volume spike up. That's a reason why. So first is that those existing warrant investors, they are selling it back into the market and back to the issuer as well. All right, so you will see the trading volume is like, buy and sell, right? Sometimes it's just market makers buying them back because the warrants investor doesn't want to hold them. They don't want to hold until maturity. Because if you hold until maturity and for cash settlement, you have to wait for 7 market days to get back your money. All right, so some people, they don't want to wait. So they just want to sell it. So they can just sell it back and you will see a very high volume for those near to expiry warrants. Yeah. But normally, when you see high volume traded for that warrants, it's also indicating people buying and selling. Yeah, so do your homework lah. So just don't buy based on the volume, because you never know whether they are selling back or they are buying. Yeah, so you have to do your own research on all the warrants that is in the market.
All right, so let's do last two questions. Okay, so Belinda would like to ask, what is your take of the recent YTL Power's bonus untradable warrant? What is the risk and benefit of this untradable warrant?
I would say this is actually for all this bonus issue, we call it the the corporate actions of all these companies is a good way for them to, to gather capitals to, reward the investors. So if you're asking for my view, I would say that it's a way that them rewarding their existing investors, but it's non-tradable. Definitely, there's a reason being because it's not going to be. I don't think it's going to be exercised that early. And it's going to be 2 years from now, if not mistaken. So definitely there will be some liquidation in the share as well. But for the existing shareholder, I don't think it would be affected much now. And especially for the call warrants, you don't have to worry, because for the call warrants over YTL Power, it's usually very short term. It's like 6 months to 9 months. So from time to time, we'll be refreshing new warrants according to current market situation. So you will see new exercise price for that as well.
All right. Now, since this is not structured warrants, but this is a company warrant, right? So maybe we can ask Max for your take on this bonus issue of company warrants by YTL Power.
Yeah, I think this one is quite interesting in the sense that it also caused a significant landslide for the price of YTL Power, where I think the YTL Power, their warrants is at 2.45 ringgit per share exercise price. Now, it depends on what price you're looking on them. Its significance around 20 to 40% kind of discount. And the warrant itself is not tradable, which means in other words, if you don't sell today, let's say the price is 3.50 ringgit, you don't sell it today, people can convert for free in the next day, and then they sell it with a premium. So that's why it would cause a selling pressure over on the share price. And you can convert at 2.45 and you sell at a premium instantly. So in that sense, it will cause a lot of selling pressure onto the mother share. I would say it would looks like a right issue that is not tradable even on the OR itself. So for investors, whether it's good, if you are long term, then this is a good opportunity for you to get more shares at cheaper level. But if you're a short-term trader, then probably it's not very good news for you, because of everyone is anticipating everyone else to convert and sell. So yeah, a lot of people stepping on other people, kind of things going on.
All right. Okay. Thanks, Max, for sharing your perspective on this bonus issue or rights issue. Okay. All right. Yep. Looks like we have run out of time to proceed with the Q&A. So we have so many overwhelming questions on the panel, but the time has run out. So I want to thank all of you here for staying tuned until the end of this webinar. Okay. Hope that you gain insights into the impact of the Trump tariff on the US and the Malaysian market, as well as learning about the basic of structural warrants and how do you use it to get leverage in this heightened volatility period, right? So if any question, you can email Vanessa, okay, at the email address that she has just given you in the chat box. So with that, thank you everybody for staying tuned until the end of this webinar. Hope to see you in our next webinar with RHB. Bye bye, everybody. Thanks, Max. Thanks, Vanessa.
Thank
you,
you.
Shane.